Hello, Baker investment students. Hope everyone is doing well. Hopefully the Chiefs can get a win today and we can add some value to the Kansas City market. Week 3, so things are moving along. So good job with forum discussion. Just keep that up for this week. You will have the journal article analysis, and just make sure to post uh, just at least the minimum, the APA or MLA reference to its journal article that you're going to use. And with the journal article, again, what I'm trying to do is get you some exposure to the academic side of research. All of you are involved in workplace research. You're all expected to deal with problems, figure out best solutions, but you use data to try to make decisions, and that's what you're going to be looking at in journal articles of investments, finance, and there's going to be some math involved in it. And I'm not worried about the math. Really, what I want you to do is get some exposure to the journal article and go through those things. What was the purpose of the research questions, discuss literature review, what were their findings, what did you learn from it. So just look at that assignment. And again, it can just be 3 to 4 pages, double space is what I'm looking for. And the other thing I'm going to give you an option this week, if you'd like, is instead of using a current event for your forum discussion, if you just want to give a summary, just a very kind of an abstract of the journal article, I'm good with that. That kind of does two things at one time. So take care of your journal article and also help you for the, kind of framing it, maybe outlining it a little bit about what the journal article is about. So that might be kind of read the journal article, do a forum discussion post that's kind of more, still the 250 words, but more an outline of what the journal article is about. And then you can go into more detail into your paper. And so again, just remember to do the APA or MLA. So addition to that, the homework problems, they should be pretty straightforward this week, but do email me if you have any questions. They're a little bit lighter this week. But those 3 items. And we're going to look at Chapter 6 and 7 this week. So Chapter 6, we get into stocks. And I kind of like to use the idea of reference of thinking of stocks as they're the last in line. They're kind of like, when I think about a income statement, I think of what's left over in profit is like the soup. And depending on how much soup there is, if you think about every single one of those shareholders being like a spoon, so the company can decide how much of that soup they're going to give out. If they give out 50% of it, there's a dividend payout ratio of 50%, and they plow back in 50% back into the company in different investments. But the more spoons you have, the more you have to divide that soup up among all those spoons. So sometimes companies will actually buy spoons back or stock back, and that can give a boost to earnings per share because there are fewer spoons out there. So it's just one strategy. But I just kind of like to use that analogy that if the company's doing well, there's lots of soup, and those spoon holders benefit, and the value of that soup goes up. If it's projected, it's going to continue to increase in the future. So you're going to look at different types of stocks. It can be defensive stocks, income stocks, dividend stocks. You'll understand the principles of market value versus book value. Market value is if we were going to go out to Yahoo Finance or CNN Money and put in a particular stock. I want you to think of market value as all the shares outstanding times that current market price. So you'll see some of these, big companies are worth billions of dollars, but there's everything from like a small capitalization, less than 2 billion, mid cap, 2 to 10 billion, anything bigger than 10 billion they call large cap. But you're going to look at some things in that chapter, such as earnings per share, dividend payout, dividend yield, some examples to calculate those, and just kind of go through some basics of stock strategy buying. Then into our next chapter, Chapter 7, it kind of brings back that idea of, are analysts even needed? If efficient market hypothesis works. Essentially, a efficient market hypothesis says that everybody's competing for information about the value of these companies, the value of these firms. And because there is so much competition about this, it's almost like we look at economics like a perfectly competitive market. So it's, the idea that if it's even weak form efficient, it says you can't use the past price information to try to predict the future. Nobody's going to have an advantage. And if you think about semi-strong form, it should say that any news that was released, we've been talking about Boeing a little bit in the news about their airplanes and problems, but it would say that, all of a sudden, if bad news comes out, that all of a sudden those pro formas and financials that are predicted in the future start changing, and then, the cash flows are going to get worse in the future, so we'd expect the stock to decrease in value. But if there's positive news, those pro formas the analysts would look through again, would start to increase, and they would say, positive news, let's reflect that in the price. But a lot of the analysts, especially analysts I know in the past, sometimes they get perplexed because they do all the math and they look at all the financials, like the balance sheet, the income statements, especially probably check those out, statement of cash flows, and they'll say, like, I don't understand, this company should be valued more, but it's not in the market, so there's no guarantees, or vice versa. But that's really what a lot of analysts do, is they look at the details of that company, look at the management, they look at the future prospects, and that's where they go out and they try to make recommendations about whether you should purchase this particular stock. So there are opportunities out there. There are stocks that are mispriced, but it's just trying to identify those can be very difficult at times. So you're going to go through those things, review financial ratios, profitability ratios, liquidity ratios, asset management ratios. Those are things that analysts would look at and try to make decisions. Is this a good company to buy or not a good company to buy? Kind of today it's that idea like the buy, hold, or sell, and even that is somewhat generous sometimes when how do you interpret that? Because if it says hold, does it really mean to sell? So the good news, I'd say, these days, I think the markets have cleaned themselves up a lot. There was a time period there where analysts, it was almost not separate from, I would call, the investment banking side. And, if a company was to do business or do future IPOs or issue new shares, you didn't want your analysts to say bad things about your company, but they should really be totally separate. And that's a lot of the changes in the financial markets that said you can't do that. You got to have these two entities separate, because there was sometimes bad information given out that saying, yes, this company is very good, but no, it wasn't. It was all to get business. So, all right, well, that's an overview of this week. So I hope everybody has a great week. Look forward to talking to you online, looking to hear about your journal articles, what you learned. And again, with those journal articles, I'm just looking more for exposure. I'm not expecting you to understand, because sometimes some of these things in these journal articles are very technical. But I'm really just, want you to get exposed to it. And what did you learn from it? That's the main thing I want you to write about. So have a great week, and I will talk to you online, and go Chiefs.